This is 2 Cents, the podcast, and I'm Nino. First of all, thank the man upstairs for waking me up and getting me back home safe. Please continue to subscribe and bring them subscriptions. I appreciate you. Thank you. I'm going to send some shout outs. First of all, let me send a shout out to my man David Parker. He's got the USA podcast on YouTube. He's doing big things. I mean, my guy is bringing all kind of great content. People, you need to check him out. Again, news, world news, movies, entertainment, motivational things, relationships, the whole nine. He has the whole big bag, the whole arsenal. Check him out. Plus, he has a very, very, very inspirational homeless channel that he's doing great things for. David Parker is a good guy. Please check my guy out. I mean, he's really is trying to make his mark and is basically going to make his mark in this podcast game. I'm very proud of him. Let me send some shout outs to my people that I usually always holler at too, because they always hold me down. What up, Norris? What up, Marlon? What up, Big Herb? What up, Marco? What's up, Don Freeman? Britt Allen? Anthony Humphrey? What it do? What up, Mr. Ross Strickland? What's up with your guy? What up, Big Curtis? Hey, man, continue to do your thing on your podcast. What up, Dre Williams? Anthony Burbage, what's good? Hey, what's up, Coach D? What it do? Big Herb Collins, what's up, my man? What's up with you, guy? Hope you're doing great things. Tony Campbell, what's up, baby? It's good to be back in contact with you, touching bases with you, chopping it up. That's a beautiful thing, too, What's up to my ladies that's always do a nice job and always pivotal and bring me topics and things to discuss. Miss Lucille, Miss Valeria, Mount Valerie, Miss Kim, Miss Shelley, Miss Amber, Miss Naomi, Miss Brittany, Miss Carmen, what it do? Miss Ivy, what's up with you? Hey, what's up, Miss Destiny? How you doing? All the women are great women, man. They always have a lot to talk about and want to discuss things. And I appreciate them to the fullest, to great young people, great women that's very intellectual and very smart. Anybody else I forgot, I'm going to continue to try to bring this content. So, I have a lot going on. I apologize, but I will get to you, You're loved, and I know who you are, even though I might not get to say it. But, I appreciate you to the fullest. Today's topic, building generational wealth. Investing in stocks or investing in real estate. You really can't go wrong with either one of them. I'm going to break down the pros and the cons, the do's and the don'ts. And then when I'm at the end of saying what I have to say, I'm going to tell you how I will roll with it. Investing in the stock market versus investing in real estate offer potential avenues for building generational wealth. Each approach carries its own set of risks, benefits, and best choice depends on individual goals, risk tolerance, and circumstances. The stock market investing. I'm going to start with it first. Historical returns. Stocks, particularly index funds, like the S&P 500, have historically demonstrated high average annual returns compared to real estate. Over the 30-year period ending up in April, the S&P 500 showed an annualized total return of 10.29%, outperforming real estate 8.78%. Well, that's true too. I'm investing in stocks. And stocks are hot and cold. It's not nothing wrong with them, but they are hot and cold. When they hot, you need to have your money in them. But if they go cold, all the money you invested could end up being depleted and you back to ground zero. But, it's all about how the market is going. Stocks have a little annual time when they are really booming and they are great to invest in. But, again, with the stocks, you have to catch it, because just like the NASDAQ and things like that, Monday, the stocks can be up 200%. By Wednesday, the stocks can be down 150%. So, but again, a lot of people have different waivers on how they deal with it. A lot of people like to invest in stocks. Again, I am investing in stocks. My big thing with investing with stocks is invest, put your money, check now and then, but this don't be wholeheartedly depending on every day or live every day stock market report. Because put your money in, go on by your business and forget about it. And then just check it periodically. That's one of my big things, how I look at the stock market. That's what I do. Because again, it can be up, but then it can be down. So which way you want to go with it, just put your money in with the stock markets, do what you have to do, and just kind of just let it go, kind of forget about it. Don't really concentrate wholly on it, because if you try to concentrate every day or keep up with every stock market report, you will be happy, but then again, you will be disappointed. Liquidity or liquidation. Stocks are generally more liquid than real estate, meaning they can be more easily brought and sold and converted to cash within transactional costs. Well, yes, because I have did it. Stocks can grow and then you can cash them out. But the things about the stocks is you want to catch them when they're hot, and then that's where they at their peak increase of financial value. So put it to you like this. If you catch the stocks are really high and you're thinking about cashing out and taking the stocks out, you might want to make that move right then and there. Because again, you can wait, but it's not guaranteed what you have in them stocks one day, 2 or 3 days later, it'll be a total difference. So that's what I'm saying. You kind of have to be a gambling man with them stocks, that you might catch it when it's very high and it said it's at the top of its number value. But again, if you trying to wait instead of, you want to cash out and you're like, well, they hot right now, so I'm gonna try to wait a little bit more and see where the money value continue to increase. You might come back 2 or 3 days later or a week later and you'll be disappointed because they're up and down. Diversification. Investing in the diversified portfolio of stocks or exchange funds called the ETF, and mutual funds allow from spreading investment across various companies and industries, potentially reducing the impact of poor performance from any single investment. Well, yeah, and see, my stockbroker, what I have been doing is I have let my stocks build up, maybe in 12 months, and then instead of just investing in one sold, piece of property, invest in one company or one little thing, I invest in 2 or 3 things. That way, if you got 2 or 3 financial entities that you're investing in, then they say if one of them go bad, or just say again, if you want to cash out, you won't be totally just broke. You won't have you'll have money still that is building and increasing with the stocks. Because if you want to cash out on that one company or that one financial institution that you put money in, you still have 2 more, so you can cash that out. So that's what I have done. That's what I learned about it too. When you get in these stocks, people, put much money as you can, and I know we have to live, Maybe if you're working at a job, maybe you want to take 2 or 3% out of your check, because that's understandable. People still have to live everyday life and get everyday resources, from groceries to paying bills and things like that. But if I have seen too, and I have friends have done it, the more that if you're making an investment through your paycheck, through you work through your job, let your job take out much as they can, maybe 20, 30% of your check. And again, don't pay attention to it. Just let it go long as it can. And over a year of time, you'll see the difference. But also, do that with the point about building up your stock history and buying and investing in more companies. So say you have 2 or 3 stocks that you're building at one time, instead of just, hoping and hanging on that one stock, and then say you might have to, emergency might have to come, and you might have to, cash out and get some money out. Now, if you just got that one stock, it's over. But if you have 2 or 3 stocks that you done build up, you can go and cash out that one stock and still have money coming out your check or whatever, and still building them other 2 stocks. The ease of investment. Getting started in the stock market can be simpler, requiring smaller initial investments and less hands-on management, especially with the ETF or mutual funds. That's true, because kind of this, as I just mentioned, you can start off in stocks, your job and your 401k or something like that. That just use that as for example, as one of the stocks. It's more different stocks, but that just use that. So if you want to do that, and they match it, you can take 2% out your check. Now, 2% you might not think is a lot, but also it's about how much money you make in an hour and how much your check is grossing, and how much you're bringing home every week or bi-weekly, or if you're getting paid monthly. 2% can be a lot. It's all about how much that you're grinding, how much that your net income with your checks is. But yeah, you can take small amounts. I was saying the 50%, but you can take 5%, 2%, any little percent. The key, as I see it, is just don't get overwhelmed. Just don't become critical and always just in the back of your mind, I wonder what my stock's doing. I'm personally saying that. Now, people check their stocks every day. I think there's people that, I have a friend that is one of our clients, and his name is Kevin, Mr. Kevin, and he's pretty much, a professional in doing this. Of course, his money is up too. See, and he checks out the stock market every day, but his financial assets are bigger than mine, so he can check that. Me, I'm just a small fry trying to come up, in a big way. So I just let mine just build, go on by my business. Now I check it, but I don't get caught up with checking it every day again, because you're going to be excited, you're going to be happy, but you got to remember, these stocks, you can be disappointed. There's highs and there's lows. It's a roller coaster ride. The volatility of the stock market. The stock market can experience short-term fluctuations, and investments can be impacted by economic events, company performance, and global events. Of course, think about it. Economic events. If it's a catastrophe, think about it. Remember the first of the year? Just think about about a month or two ago, when President Trump gave the okay to go over there and hit that compound in Iraq or whatever. Now see, stocks had emphasis. That stocks took a toll with that, because they could either fluctuate, or they could go up, or they could come down. National disasters have a big thing with stocks. Like say you get a big rain out, or thunderstorms come through, a tornado comes through and wipe out a certain region or a certain little town in the United States or something like that. See, stocks, that puts a toll on stocks too, because it still is based on things that happen. You know, current events, global events. Just like over there when, what was that early this year? I can't think of it. Oh, when that plane had that crash over there, and I forgot it was one of them. It was on them country. I think it was in India or something like that. My mind kind of losing them, but I remember I did a little podcast on it, but I can't think of it right offhand. I apologize. But anyway, that's, you know, a stock takes a hit on that. Your stock's taking a hit on that. See, stocks are worldly, globally, you know, nationally and all. And when disasters and current events, whether good or bad, happen, the stocks can take a hit. That's what I'm trying to say again. It can go up or it can go down. Now, most of the times when it's a national disaster or something like that, the stocks will surprise you and they'll go up. That's how word it is. And then at times when things are just going nice, smooth and vanilla, the stocks will go down. But yeah, they fluctuate up and down. That's why, again, don't worry about, I would say, paying attention to your stock history, financially wise, every day. Check it, but check it, you know, maybe every other week. Give it time. It will grow and it will hit big, but you have to, you know, give it time. What I'm saying is, if you're very impatient and you're looking for $1 million, you know, don't put small amounts in stocks. I wouldn't. For you to look for $1 million in stocks, and also do your research and look at the certain places, companies, and entities again that are doing good in stocks, you know, that you can invest in, and the possibility of them are always on the upward than on the downward spiral. They're always on the upward spiral rather than a downward spiral. Now let's get to real estate. Stability and tangibility. Real estate tends to be less volatile than stocks, offering a tangible asset and a sense of security. Of course, because think about it. Now, real estate, I think, is much harder to get, and you think probably have to get more money, but real estate is yours. It's yours, no matter what you want to do with it. You get your hands on some real estate, even if you go through certain things that the real estate may take a time before you see the money it might be a minute before you start to seeing the money that you're making from the real estate, but still that real estate is yours. You can, once you buy it, you can, even if it's not doing good right then and now, sooner or later it will, because real estate is something that people, you know, are very excited and love to have of their own possession. Real estate is great because you can put buildings, you can put, you know, rent houses, you can put companies that build. Just think about companies that build buildings and manufacturing places. They bought the real estate. That's what you need real estate for. So real estate is, you know, it has its, you know, pros, it has its cons too. But real estate is real solid. And basically, when you're talking to people now, and I've even seen celebrities, I have looked and watched and seen them when they kind of give advice on it. They'll tell you basically to roll real estate. It's not nothing wrong with the stocks, but the real estate, because the real estate is yours. It's solidly yours. You have paid the penny for it. It's yours. Now, even if you have, you know, a bad streak with it, you can always turn that bad streak around and get back on a good streak with it. Rental income, one of the best things about real estate. Rental properties can generate a steady stream of income. Love it. I know a lady now that's very dear to me, and she has a nice abundance of money. I'm not going to say her name, but she know who I am because she's one of the subscribers of my podcast. And she is making this an overwhelming abundance of money with renting out with her real estate. And she tells me all the time, Nino, I just want to rent. Because think about it, long as she's renting off her property, she's never going to sell it, and they're never going to buy it. And that's a constant check coming in, income coming in monthly. And you can think about it like this. If, just say she's bringing in off her rental properties, she's bringing in, maybe even one property, she's bringing in a house or apartment, they say that, what, $1,500 a month. Then you do 1,500 times 12, I mean, that's a nice annual income. You dig what I'm saying? So that's the good thing about real estate too. And she always remind me, and I even be telling her, I'll be asking, I don't tell her, I'll be asking, say, you not willing to sell that property? No. Why would I sell that property when I can steady rent and get that for sure check? Because if she selling it, she's not going to get no more checks. She said, come on now. You're not thinking like a business person. You're not thinking logically. You're not thinking financially. You're not thinking even like a hustler. That's a good point of, you got to spend money to make money. Tax advantages. Real estate offers unique tax benefits, including mortgage interest and property tax deduction, depreciation, and 1031 exchanges. Yeah, because even if you bought a house from this person that, the property is on, even if you bought it, you still got to pay them that mortgage every year. So you're still making some money off the property that they have bought from you. The house, yes, the people that you brought the house, or the residents, or the tenants, or the people who moved in has brought that house from you, and they don't pay no more, rent every month. They just paying utilities, but still they paying that mortgage that goes to you. You got tax deductions too, and that helps too on property tax. See, again, it's a beautiful thing with the real estate, because now you have property tax deductions that can be helping out too when you have that real estate and that property for a long time, And again, it's always something unique and beautiful about the tax benefits of tax advantages when you have real estate. Inflation hedge. Real estate values and rental rates tend to increase with inflation. Well, that's why it's great to have some property right now. Because what are we going through right now? Inflation. So just think all the people that have some real estate, where if it's even a little lot, where it's even 10,000 square cubic feet, 50,000 square cubic feet. Hey man, if you just have 10,000 square cubic feet, you can rent out a little function that the people might want to throw a little party at. They can bring the thing to set up the party, maybe a tent or whatever. That's on them. But still, you rent that out. You get paid for that. And again, inflation goes with that. So inflation with everything, how it's going now, just think people that is renting out places. When inflation goes up, I'm sorry, it's a part about the rent got to go up. Just like our food goes up. So you have inflation hedge. Now, real estate too. That was some of the pros, now we're going to have some of the cons. Lower liquidity. Selling a property can take weeks or months, limiting access to funds. Now that is a downfall of that. See? Now, you heard some of the pros, now here's some of the cons. Now, if you willing, I would say on that, have another financial highway of getting expenses or getting money some other way. Because, again, that can hurt you too. Because the property can take weeks or months selling. It just might be in a bad area. You know, it's property taxes what area you have your property your real estate in too. That's a big thing too. You know, you it's high value, but it's in the property. This say I'm gonna keep it a bug with you. This say you have a lot of property, but it's in the ghetto. I'm not gonna even say the ghetto. It's gonna be in urban, the urban side. It's gonna be in the inner city. Let's say it like that. Property taxes gonna be much higher, and the value of the property is gonna be much lower than in maybe a middle class. That's why I think a lot of the gentrification has came in effect, and I see it even in my city. Rich people are buying that have bought real estate. They're taking places in the inner city or the rural area and putting businesses in them, lavish business, and they're buying restaurants. They're buying and putting apartment complexes. And see, they're going to get that money back because still, whether you in a suburban area or whether you in a rural area, people got to live. And just because they have came with the gentrification, are they bringing people that have a rich in real estate and putting more, new plans of real estate in there by the restaurants and the apartment complexes, so whatever in there. Them people still gonna have to live there, and they can't go nowhere. And then a lot of times they bringing them new apartment complexes in there. They are really lavish and they look nice. So people are attracted to things that looks very nice and brand new. So again, you can take a rural area, put something nice in there and fresh, and then there you go. That community, that area, that section will be prosperous in money, especially for the people who have the real estate and who have put the properties in there, so they're making money in it. You always can make money anywhere, no matter how it looks. It is, your skill, your craft, you know what to do. So that's how things go there. Higher upfront loss. Real estate requires significant down payments and ongoing maintenance costs. Well, yeah, because I can see that too. Because that's your property. There's going to be quirks and, things going to go out. Things going to grow old. Things going to break. So you're going to have maintenance costs. Whether apartment complexes, a lot of these people that buy these apartment complexes that are big in real estate, it can go smooth at first, but with anything that's new, it's going to eventually get old. And with it getting old, anything that's running smooth, sooner or later, a defect will come. Time commitment. Managing rental properties requires a hands-on approach, including maintenance and tenant relations. Well, yeah, because you got to keep up with what your tenants is letting you know. My big thing about this, if I had real estate and have an apartment complex, I would try to stay on every little maintenance thing that I can. Now, sometimes you can't because you get behind, and a lot of times people have other business endeavors that they got to take on, they have to tend to. I'm sorry. But I would always try to, if I was, had real estate and I had a couple of apartment complexes, I would even, assemble me a team that I would pay them to stay hands-on, keep up with what my people that I'm renting these apartments or whatever, or maybe even duplexes out to, because that is my bread and butter. That is my money, and I have to keep them happy, because if I don't keep them happy, then they gonna leave. And then if they leave, it's no rental coming at the end of the month. Then I'm not making no money. I just bought a big old, me as a real estate owner, I just bought and now open up and laid out a big old apartment complex that's vacant. Now I'm losing money. The summary. Basically, stocks as far as investing and real estate as far as investing. Both are quality financial structures, units, are foundations to start a financial history. But if I had to make an A or B choice, I would pick real estate because it's 100% mine who invested and purchased it. People are in demand for rent properties from the owner as well as buy property from the owner. So, again, nothing is wrong with buying stocks. Nothing is wrong with buying stocks. I have stocks myself. I'm not going to sit up here and give you guys a lot of jive and say I don't have stocks. But I believe the way to go is real estate. How about this? Build up your stocks, let your money increase greatly in that. Let your money increase 100%. It might take a couple of years. Keep investing, keep putting money in that big old bag that you're trying to, assemble and build. And then when it gets big enough, it's getting large enough, or you have enough, then take some of it out and then try to buy you some real estate. Again, you have to spend money always to make money. If you can, keep your stocks. But, like I say, I'm pushing now to get me some real estate. Yeah, that's what old Nino is doing. I would have to pick real estate if I had to pick. If right now somebody would say, look, Nino, you can't straddle the fence. You have to make an unequivocal, unapologetically choice, A or B, investing in stocks or investing in real estate. I would say I'm going to invest in real estate. Generational wealth. Invest in stocks, invest in real estate. 2 cents. This is the podcast. I'm Nino.